Hey, so if you're a homeowner in New Zealand, you have definitely heard this one before, right? The classic advice, switch your mortgage to weekly payments. You'll save a fortune. It's one of those tips that gets passed around at barbecues. And honestly, it sounds like a brilliant little hack. But is it really the game changer everyone says it is? Let's dive in and actually find out.
I mean, that's the big promise, isn't it? The idea that one simple phone call to the bank could literally shave years and thousands of dollars off your home loan. It just sounds a little too good to be true, which, usually means it is. So let's get to the bottom of this.
All right, first up, let's talk about the promise itself. It's this piece of financial wisdom that's almost a rite of passage for Kiwi homeowners. But where did this idea even come from, and why is it so popular? And you hear this everywhere. The logic behind it actually seems to make sense on the surface. You pay more often, you chip away at that big principal balance faster, and so you end up paying less interest over time. But to see if that logic actually holds up, we need to look at what the banks really do when you make that switch. Okay, and this is where it gets really, really interesting. We're about to peel back the curtain and look at the actual numbers behind this whole weekly payment promise. And I'll tell you now, you might be in for a bit of a surprise. So let's take a pretty standard example. Say you've got a $600,000 mortgage over 25 years. Your monthly payment is going to be around $4,080. Now, if you switch to weekly, it becomes about $941. Looks pretty straightforward. But the real question is, how did the bank even get to that weekly number? And here it is. This is the big secret. There is no complex, fancy financial wizardry going on here. The bank just takes your total annual payment and divides it by 52. That's it. So you aren't actually paying more money over the year. You're just paying the exact same amount, but in smaller, more frequent chunks. So what is the real saving from all this? 68 cents per month. Yep, that's it. That is the entire saving you get, because the interest is calculated on a slightly, and I mean slightly, lower balance throughout the month. It's not zero, but it's definitely not the thousands of dollars you are hoping for. And this quote just hits the nail on the head. A few $100s over a 25-year loan is, well, it's a far cry from the life-changing savings people talk about. So if the weekly switch is basically a bust, where on earth does all the confusion come from? Well, this is where things get a bit clever. And that leads us to the next piece of this puzzle. It's a very common, very clever strategy that often gets mixed up with the simple weekly switch. A lot of mortgage pros call this the Fortnightly Fallacy. Now, this is the strategy that actually saves you a ton of money, and it is the source of all the confusion. See, the power isn't in the frequency of the payments. It's actually hidden in some really simple math. Let's break down exactly how this clever trick works. So you take your monthly payment, let's say it's $4,000, and you just pay half, so $2,000 every 2 weeks. Now, because there are 26 fortnights in a year, you end up making what's equivalent to one full extra monthly payment every single year. It's a super simple, kind of sneaky way to pay more without even really feeling it. So here it is, the big takeaway. The magic isn't the schedule. It's the extra money. You are simply paying more off your loan principal each year. And let's be clear, any strategy where you pay more will save you interest. It doesn't matter how often you're paying it. Okay, so we've officially busted the myth. Now let's talk about what really moves the needle on your mortgage. Let's shift gears from what doesn't work to the high-impact strategies that can genuinely slash your loan and save you some serious cash. So instead of obsessing over payment frequency, here's what you should be looking at. There are powerful tools like offset accounts and things like split loan strategies to manage your risk. But honestly, the most direct and powerful approach of all is just paying more towards your principal. Let's look at the absolutely staggering impact of that. Just look at these numbers. It's incredible. On that same $600,000 loan, finding an extra $200 a month saves you over $80,000 in interest, and it gets you mortgage-free 4 years sooner. Now that is a real game changer. The difference is just absolutely massive. Another really powerful tool is an offset account. It's super simple. Any cash you have in your linked savings account is basically subtracted from your loan balance before the bank calculates your interest. So if you have $50,000 in savings, you don't pay any interest on that $50,000 portion of your mortgage. It's a brilliant way to make your savings work so much harder for you. Okay, let's bring this all home.
Knowing everything we've just talked about, what's your smartest move? Where should you really be focusing your energy to get the biggest possible financial win?
You know what? This slide just sums it all up perfectly. Think of your payment frequency, whether it's weekly, fortnightly, or monthly, as a low-impact decision. You should just choose whatever works best for your cash flow, for your budget. The high-impact decision, where the real savings are hiding, is in your strategy, making those extra payments and using smart tools like offset accounts. At the end of the day, this is the bottom line. Don't worry about trying to find some secret frequency trick. Instead, just focus on a consistent plan to pay down your principal loan, even if it's just a little bit extra each month. That right there is the real path to saving thousands and becoming mortgage-free so much faster.
So, I'll leave you with this to think about. Now that you've seen the real math behind the myth, what is one small thing you can change about your own mortgage plan, starting today, that's going to have a huge impact on your financial future? Thanks for joining me for this one. Stay curious.